Alright, hello everyone. So last week I was doing a wrap-up video and I did say I was going to show a report which I forgot to at the end of the video. So what I want to do is put that on board here and see it. By the way, there's some hazelnut harvesting going on in the background. So in fact, can you guys see it? Let me show you how it's looking. Okay, so that's all getting done there. And what they're going to do is they're going to take all the leaves off with that big blue machine over there, and then we're going to end up with hazelnuts just with the shell, and then we're going to wrap it up and sack them up. So we're going to do it fast before the rain comes in. Okay, so let's get back to business. Okay. So what are we looking at here, right? There are two documents here. One is in Word because I got it analyzed by two different AIs. One is for, well, they're both for data, right? So this is one of them, and this is the other one, all right? And the important thing to understand here is this is done for Bitcoin because I sent it to a crypto fintech trading company because they want to use a bot for it. And then they can just check out how it's going, and if they have some kind of a data with them, then they can test it out, and which they're going to be testing it out soon. I gave them the PDF for Cycle Edge for the whole year, right? So for the whole year they know what's going to happen, when are the trade days, when are the swing days, the trade hours, and so on. The important thing here is to first of all get our heads around the methodology and how they came up with it, how the analysis was done. As you can see here, I'll make this a little bigger as well so you can actually take your time to read it how you want in your own time as well, so you can read the screen. The important thing here is the 24 hours. So we have a tolerance window. The thing is, I had it measured for exact days and also for plus 24 hours. Why? Because cycles, they're not always on the dot. The daily ones can really be good and can really bounce off nicely when you match it time and price. But in any case, when we have a trade day, swing day, it's plus 24 hours. So not plus and minus, or plus or minus 24 hours, but the exact day or the day after. That's what I'm looking for. Why? Because we've got 5 trade days. So me doing plus or minus 24 hours, that's like 3 days of the trading day, a trading week. And if I have 2 trading days, which normally we do, then it just defeats the whole purpose of being exact, right? So that's why I wanted to make it like specific, and I wanted to like separate it. So when does it exactly become exact, and when's the 24 hours after? And I also wanted to evaluate it with respect to Bitcoin from 1st of January all the way into the 16th and the 18th, I think, of August, where I took the prices for the open, close, high and low for each day. And from there on, the price was evaluated, and the number of signals I got. These are including the vector days. As you know, we have vector days where we have on the chart, well, not just vector days, but this is NASDAQ, for example. Let me take a look at Bitcoin, right? So for example, with Bitcoin, if I just come to any day, here or here. Okay, so for example, this is for this week, right? So that's, for example, Saturday. Okay, yeah, Saturday, for example, it's got structural and volatile. So knowing this in advance, I've also integrated it into here. This is a high tension day. So if I go to Bitcoin here, I can check if it's structurally volatile. If the vector day is a routine day, we'll also check them out as well. The top peaks, obviously, for the week, and what's coming up later as well for every day. So all of these days, Friday, Thursday, Wednesday, as you know, on the chart we have like high tension critical day. Okay, so this is the 17th of August. So if we go to 17th of August, high tension critical day, that is 14, 15, 16, 17 August, right? So you can see how things are like, you know, it's giving us a heads up. And remember, this month of August was printed in July. Okay, so let's get back here. So all of those days, the exact day, whether it was successful or not, the plus 24-hour success rate plus the combined success. So if I use the day or the day after together, it gives me a good success rate here. So you can, as you can see, right? And here's the aggregate total. This is for an increase of 1.5 to 2% on that day. So we're looking for a profit of like 1 to 2% on those days. The other thing is, I've got 2% minimum price displacement as well. I've measured that as well if I want to go for 2%. Why is that helpful? Well, if I know how much I can make on that, it allows me to do proper risk management, and then I can just follow that through. And if I get higher and higher with my expectation, as you can see, the success days are going to be reduced. So when can I have a success rate of 4 or 5%? When can I have a success rate of 2%, 1 to 1.5, or 1 to 2%? Those are all kind of like separated. And as you can see, with the 5%, the success rate goes down to 33.3%. But the important thing for us is, because we're intraday trading or only trading for a few days within the week, this is like, you know, the bread and butter and the jam kind of thing. And there are other factors I'll be putting into this as well. For example, when we're doing pricing, is it bouncing off a weekly time, space and motion indicator price? Is it bouncing off a daily? Is it going to be a gain day? Is it going to be a shock day, peak day? So vector days are also going to be important, but this initial setup is already good, because even with 4%, 57% success rate, it's pretty good. The reason it's pretty good is most traders get less than 50% success rate, and they have to wait on their trades. So for a risk high, a good risk return ratio, a good high risk return ratio is necessary. So if I'm risking 1, I want to get 5, 6, 7. You know, if I'm obviously having a low success rate, you can still make money with even 33% success rate if your losses are less than what you expect. So if I'm wanting to get 5% from the market and I'm just risking 1%, this is still going to make me quite a bit of money. But because we're day trading or trading for a few days, like I said, the real stuff is in the 2% range. And this is the strategic observations. Also, you can take a look at that as well, actually. But well, I'll tell you as well, in the members area here, I've also placed here in the start here zone. What you can see is cycle edge report and how you can use it for a rule-based trading system in the members area as well, right? So it's very helpful. In the core cycle edge report part as well, you can see here there's a download for the user guide, and there's a 5-step again, 5 simple steps as a guideline to integrate cycle edge into your trading. Because at the end of the day with cycle edge, what we're doing is timing the market. So I want to have a good day and I want to know the good hours so I can trade with cycle edge. And you know, this is exactly why we have hours. I've graded them as well, so you can just integrate it into your technical analysis, and whatever technical analysis you're using, that's fine. All you have to do, if your technical analysis is consistent, at the end of the day, I mean, what's the market going to do? It's either going to go up, down, or sideways. So if you know your setup, you can just integrate that to your style. And here on the Bitcoin daily, for example, this week we'll be looking at highs Monday and Tuesday because of pretty much the market, cycle age market report is telling us on that. Okay, so let's take a look. This is last week's 18th of August, 20th of Friday, 20th to 21st, Thursday, Friday. So on the Tuesday as well, you can see on the 17th it was a critical day. On Tuesday we had also a push to the upside and just going all the way into, following it through into Thursday, Friday, which is the 21st. Let's take a look at the 20th and the 21st. This is the 20th and that's the 21st where it made the high. So you can see from the beginning of a week with a high volatility market, what we can actually do is follow the trade all the way to the next target, and that's the whole idea. And if it bounces off a weekly or a daily TSM level, like it did, and I had actually marked it in right at the bottom somewhere here, along the lines here, it was pretty much where it took off on the weekly, I think, and the daily was a little underneath it, slightly underneath as a price. And that's how you can just integrate it and then find it and then use it. And this was also a TSM target price, if you recall, on the weekly. So knowing the price targets in advance, where we're going, which is that one. Last week's target was pretty much on the weekly, 78,924, and we're still at that zone, as you can see, and this is today's price level. So as long as we're not breaching it, then what we're going to look for tomorrow, because we've got Monday, Tuesday this week for this one, and the reason I've got Tuesday is in the weekly insight, where we have sudden movements ending. So the market is going to go to a routine phase after today, and then we can trade it off. And this is going, as you can see, sideways. So the only thing the market can really do is break out and push, or we're going to have a stop sweep and just fail, come below that level and just go down. All right, so there are only two options there, as you can see, and all we have to do is wait for the day, the hour, and the trade setup. The beautiful thing with the day and the trade setup hours as well is you don't have to rush the trade. You know when you're going to trade, and that's basically it. Let's take a look at the second one, because this was one, and you can see this is a short one, and I have another one done, and this is a bit longer as well. But the interesting thing is they both came with the same stats. So it's done by two different AIs with the same PDF document, also the same, obviously the price is going to be the same, the open, close, high and low, and this is the overall summary, and let's take a look at that. All right, so this is how they kind of brought it together as a combined success. This is the 24-hour success rate, and what else did I have, plus or minus? Yeah, this is the exact date, and then this is with the 24 hours, combined success 92, evaluated 94, threshold 1.5%, 2%, 4%, 5%. You can see as we get to the higher levels, the percentages falling a little bit. Does that mean we can't use them? We certainly can use these levels. When can we use them? Very easily, if we are on a weekly zone. Right? On anything that's weekly and daily on the TSM, I'm definitely expecting the market to make a push. All right. Also on the monthly, this is a beautiful breakout. Where do you think we're going? We're going there. But because this is monthly, next month needs a pullback to come back to a goodbye kiss, which should then take us further to the upside. Okay, so that trend should continue, and this is actually in line with any kind of technical analysis you're doing. Even if you're just doing a simple channel line, if you match your technical analysis, right? If you match your technical analysis to whatever you're doing, right? just match your days, match your weeks. If it's the day and if it's a low, you go long. If it's a high, as you can see here, right? Why did we have a high there? Because that's a market high where they sold off. This is where they sold off before. Trade day, so sell off where to? Well, you can sell where to where they bought before. You see how it all works out. Okay. You can also see all the history in the members area if you're a member. So I recommend you to do that. Actually, go and check out the past. We've got category performance here: high tension, critical, low, standard, apex day, shock day, as you can see. What else do I have? Drain day. So those were good. As you can see here with 100% on the, what is that? Combined success is 14, 85, 92. What about shock days? Shock days, if it's exact, got 91. So it's pretty good. You know, when you match it with, obviously, when you're matching the shock day with a classification like an apex volatile kind of thing, because that is going to be your, let's take a look, your vector day, right? So your vector days here, like your routine, your shock day, and then those are the shock days. And then if you do that on a trading day, obviously it's going to be, you know, important, and it's going to just make your day. Turn date validation, pretty much all here, and that's it basically. I've got, what else do I have? Macro failures. Here we've got some failures, so worth noting as well, right? So where did we fail, where did we lose, or where did we make mistakes, or what combinations I can use to do a good trade and what ones I can't do. For example, maybe, I don't know, if something really low or dangerous in gain, like here I've got 0.85, right? So there. So if I'm, like, you know, not doing good at certain combinations, then I shouldn't be doing it. All right, so I can just pick the good days, and this is what they want to do. So they're going to turn on a bot, right? They will turn on the bot when we have, for example, a good daily setup, right? So it could be high tension plus, I don't know, a vector day, for example, gain day, or a shock day with high tension. So those kind of days are going to be very profitable if you follow them through. And these are the dates I took. So from the 1st of January, as you can see, all the way going down to August. So that's pretty much 7.5 months, or 7 2/3. And that's the price data. And here's the methodology, right? So this is important as well, I guess. So methodological criteria from January 1 to 16th of Jan. Price data available through August 19, because I did it on the 20th. The market was, you know, running on the 20th. So, and that's it. You know, these are the setups, and overall this is the summary. So like I said, with the cycle edge report, time is the important thing. That's what we're measuring, right? According to the cycles, what day is it going to turn? When's it going to be a volatile day? When's it going to be a gain, peak, drain, shock? All of these days are important. Not to mention, also when you're trading intraday, you have your intraday windows, which I highly recommend. This is for what, 17th of August. I highly recommend you use them, because, you know, if there's sustained pressure after this ends, you know, it's going to start moving. All right. So for example, this is what, the 17th of August. Let's take a look at 5:25 to 6:55, because this is my time, but this is New York morning. Remember, this is my time in Turkey, and this is the exchange hours. So if I take a look at 525 to 655 on the 17th, let's go to the 17th of August. We went too far. Here we are. Let's make this a little bigger, and let me just set the here, let's just make this 75k. Oh, let's make it 80,000. Well, 62 is fine actually, so why are we not doing it? Here we are. All right, so this is the 17th of August, right? And here we are. So if there's sustained pressure, let's take a look at the hours again. Sustained pressure, 955 to 150. 955 to 150. This is 955 here. All right, it's a 15-minute chart to 150. You can see there's sustained pressure happening. All right, 150. And once that sustained pressure is over, look, just close to coming up to 150, we have a push to the upside. Another sustained pressure time window is 525 to 655. So let's check that out. 525. This is 525 here on that 15-minute bar. And then this is what, 6 o'clock. 6:45. Okay, so this actually broke out. So this sustained pressure was okay, it didn't allow the breakout, but once the sustained pressure was over here, as you can see, the market broke out. Here it just pushed up again. So knowing these hours, it allows you to look for it. Okay, so look for it. And then we've got a V-shaped retest going up, probably somewhere to retest. That's your V-shaped retest going into the highs here. All right, and that's your zone. All right, and that's Tuesday the 18th, and so on. So those hours, those windows are also a good opportunity. You can match them to your technical analysis and follow it through, and all of this is in advance. So you guys get to know all of this way in advance, like days to weeks in advance. So this one I printed on the 23rd of July, posted it up probably on the last week of July, just ready for August. And this week I'm going to be wrapping up September this week. Yep. All right, so this is how the stats are. I wanted to show that and didn't get a chance, so I just did another video on it to let you guys see how things are turning. And remember, I'm sending these to actually fintech hedge funds where they're actually trading, so they want to evaluate it and then use their bots just to trade on those days. So rather than keeping a bot open 24/7, they're just going to get the PDF and say, okay, you know what, we're going to press the on button this week, and that's it. If we don't have anything good, we're not going to turn it on. Why? Because the bots are not making that much. Because if you think about it, the market was going up, down, or sideways, and they don't have the knowledge of what's going to happen, when it's going to happen. So knowing that in advance just allows you to turn it on, turn it off. Right, back to harvesting. Have a good week.